Let's stick with financials here. The Chartmaster is here with his take on whether this week's momentum can continue. Let's get to Carter Worth of Worth Charting. Carter, what are you looking at?
Well, we're going to drill down here, just as you've been doing on financials and banks in general. But before we get to the charts, I think it is important to make the point that while it was a good week for the sector, regional banks underperformed the S&P 500 financial sector. The NASDAQ bank index with almost 300 stocks underperformed the sector. So the sector is influenced by things like Berkshire, property casualty insurance stocks, life health, investment banks and brokers, asset managers. But look at the charts and figure it out from there. Two all data charts. This is all data going back to 1989, and it's simply two colors, two lines. The top is the S&P, the bottom is the financial sector. The market has almost doubled the performance of financials since the beginning of GICS data in 1989. If you look at this a different way, second chart, it's the exact same thing. It's just a relative performance line. So it's a ratio. And financials on the lows of COVID were at all-time lows, and they're basically barely off that low. Now, of course, that might be the opportunity. I don't think it is, but some people would say this is why it's so cheap or so much upside potential. Let's look at the actual index itself. This is XLF, a great ETF, very liquid, tradable. And so the sell-off of 27% brought us back to, as all will know, the highs from which we sold off. So you get down all the way down to the pre-COVID high, and we've bounced, as has the market. So the final chart and the real question is this: as we work into the apex of these converging trend lines, is this a setup for financials to break out to the upside, or basically are we sort of churning and stall before ultimately sort of slipping lower? I'm in the latter camp. I want to be underweight banks.
All right, Carter, thank you. We'll see you in a few minutes on Options Action. Carter Braxton Worth of Worth Charting. Steve, you like your charts, so what do you think of Carter's?
So I do like the charts. I do like Carter's charts. And I think that the overarching message on a fundamental level is that when expectations for shorter rates subside or come back in, that's when you're going to get the real steepening of the yield curve. That's when you're going to see value outperform. And the key and the core of that are going to be banks. We're not there yet, so I expect this XLF to probably turn around and go lower. Shockingly, Wells Fargo, you said it before on the intro, is the outperformer as far as the monthly and the year to date. That chart looks the best to me.
Rates are like any other markets, though. They anticipate things. And if we are to believe that we understand what the Fed's path is through the end of the year, Bono, and then perhaps the shorter end of the yield curve has factored this in a bit.
I think I tend to disagree there, Mel, and shockingly enough, you tend to read my mind, but I really think that the markets have been fighting the Fed for some time now, the better part of 2 quarters. So I'm not really sure whether I'm looking at the futures market. Just look at the expectation for the next rate hike. It was mostly 50 basis points. Now I think it's about 2/3 to maybe 75% in terms of probabilities for a 75 basis point hike now. So I really don't think the markets are pricing in Fed action properly at all. And I truly think that's the crux of the issue there. So until we get a bit more clarity there, or perhaps until markets are more willing to actually take the Fed at face value and interpret what they're saying and then have that read into markets, I think it's not going to be until that point that truly the markets are going to be reflective of truly where Fed policy is headed.
So if Bonwin is right, then to me, it's not so much about financials, it's about high flyers and big, right? Big yeah. PE, where I think you have the most vulnerability.
Right.
It's more than financials, even if the economy slows down.
So for instance, like an IGV.
Like an IGV, which
short.
I'm short, but I did cover some this morning after we had our discussion about, well, you know, something like DocuSign being up, popping in Z-scale. So you should come to the dark side, Melissa. And you're really good at this TV thing, really good.
Then I can't play Traded or Faded.